Good evening, this is Nick Inman from VolumeProfileTrader.com on Thursday, February 2nd. And looking at the S&P here, there's one thing that really comes to mind. Just looking at this week's profile, and that is that these most recent days, basically, the job number should move this market tomorrow. And it should present some type of opportunity, whether it be to the upside or the downside, for a trade, a good trade tomorrow. I would expect, if there's any disappointment and the market moves lower, then your target on the downside would be down towards that 1310, 1307 level. That's going to be your target. And for the upside, really, basically this week's high, 1327, last week's of, call it 1330, and really the potential for another breakout to the upside in this market. For prior to this week, for two weeks straight, we had a lot of price action down towards this 1307, 1310 range that really mattered. And this week we started the week dropping it below it. Looked like we were going to move lower, and then looks like buying came into the market, pushed it above these levels, consolidated at those levels on Tuesday and Wednesday. Wednesday night broke out, traded up Wednesday, held those levels today, held those levels. The only thing is, point of control at 1322, 1323, it's going to present some type of, or I should say it could present some type of topping pattern, and that would lead to a downside move with a lot of stuck buyers at these levels. So just something to be aware of. But if we do break out to the upside, it's really all clear. I would say the next target is 1350, which, it's a nice even number. Looking at gold continues to make its move higher. Now you're looking at these recent, the 1747 to 1750 range as support on gold. So this continues to work to the upside. The only thing is we are at the top end of the range, so we could see a little more selling pressure and be back down at 1750 or so tomorrow, but we would be looking for another buy off the bottom of this uptrending channel, and along with the point of control support. So you can see some type sign tomorrow, basically at the close where gold would be, you could see some type of opportunity to get long and perhaps see more upside. Natural gas, I think this is something that you want to keep on your radar. This week, today we exploded again to the upside. Point of control at the very bottom of the range for the week. Blasted straight up to last week's point of control. Gonna see if it can hold. If we get through that, this could be the reversal that natural gas has been waiting for. And if I bring up a daily chart of natural gas, you can see that we kind of have this double bottom looking pattern. So if we can clear basically what was support for last week, if we can clear those levels and we hold them on any test, for example, we break out, test these highs, and then come and make a higher low, I consider that to be bullish, and more upside potential is very, very doable in natural gas. So you look at a name like Chesapeake, which is up almost 6% today. This is something that you can buy this and have your risk defined, have your stop right under under yesterday's intraday lows, and basically enjoy the potential for a nice bounce. Alpha Natural Resources, don't take your eye off the ball. Up 7% today. This has become very volatile, and it's always been a volatile name, but the volume, look at the volume now relative to where it has been in the past. You can see that almost every day has hit this random mark. I put 8.5 million, just random. whereas the beginning of last year, the middle of last year, only on certain days did it touch those levels. So this is bona fide breakout material. Just really keep your eye on it. I mean, up 7.5%. It's hard to be a buyer, but maybe grabbing some upside calls isn't a bad call. Las Vegas Sands continues its way higher. Ignore all of the intraday price action. If you zoom out and look at what's going on, it's made a new 52-week high. You zoom out even more for the last 2 years, and you can see we are at a potential, we have 55 as the ultimate high, but generally speaking, we are at a potential breakout for this stock, and this thing could really get going to the upside. So it's something to be aware of, and I hope you are long this name. MasterCard, there you go. Nice move after earnings. We were on this. Hopefully you're in somewhere around 340 or so, and now you're up $40 on the name. So it doesn't look like this is going to stop. It looks like it's going to continue to the upside. So there's no reason in selling. American Express continues to work. Stay long this and stay long the credit cards. They're all working. Another name I bought yesterday, added on today, ConocoPhillips. Let it do what it's going to do. I'm buying it because it's at the bottom of the channel. It's close to the value area low for the last 52 weeks. And I want to see this thing get back up towards $75, which I think it can. If you look at oil, now when you think of oil, or I should say when you think of ConocoPhillips, think of oil in terms of price action, so that it looks like this is rolling over, but the last few times oil has been down to this 95 level, has it been right to be a buyer or a seller? And the answer is a buyer. And looking at zooming in a little bit, January, the month, you would think that we'd get some kind of bounce, point of control at the bottom end of the range. That's just really calling for some type of bounce. Instead, we get a breakdown. But one thing I want to I think it's important to realize is we are at the, we have point of control for February, which really isn't that big of a deal. It's only been 2 days. At the bottom end of the range, I've seen this many times where a stock will break down below, snap back, and then this point of control level ends up being support, and then the move higher starts. And this move down was one big rejection. So I'm not saying that will happen, but what I am saying is keep on the lookout for that and the possibilities, because with that is ConocoPhillips as far as an opportunity. And for the last 3 or 4 months, it's been right to be a buyer of ConocoPhillips on the weakness at the bottom end of this range. So just be aware that the same setup has occurred once again, and ConocoPhillips looks like an opportunity. Apple, stay long, stay strong. Do not sell this really until it hits 500. Then you can, or 485 or 490. There's really no reason to not be long Apple. IBM, top end of the range, just watch out. That's really all there is about that. Intel, same thing. This looks a little toppy. I'm flat on Intel, and it was a good move buying back down towards 23.5. Right in this range. Took profits towards the top end of this channel. Let the rest ride, and now January is basically telling me look to take some profits. Okay, I've ignored Ford for a while. Long this name down towards, I have a cost basis around $11. But looking at Ford, I like the fact that $12, not only is it a round number, but it's January's point of control. And I think any weakness at those levels should be a buying opportunity. to add to your position. Right now I'm short the 13 calls against, long about 11. I have about $2.40 if you include the calls worth of profit, and just gonna enjoy that and basically let Ford ride. Now, if you're looking at Ford's brother GM, I would stay away from this. I don't like this. Ford's looks a lot better in terms of a chart, and I think as a company, I think it does matter in the long run that Ford did not receive any bailouts, and I know that's very distant in the past, but really in the bigger picture, it's not. And GM has a lot of. I was reading this earlier. GM has a lot of pension obligations, so I think that's something to be aware of also. Watch for an opportunity in Oracle. January's point of control, it's down at 27, but if enough volume is printed here, 28.40, this level matters, could present a trading opportunity to the long side. I just want you to be a part of it for it. Really, the trade was a move off of these lows, and it was a great one, in fact, but there could be a continuation to the long side. EMC, this is ridiculous. I really hope everyone's long this name. We were all over this, $22. Now it's trading 26. It's almost at our price target in less than a month's time. So it's pretty incredible that EMC continues to work. XLF, which really surprises me, is it continues to outperform and make new highs. And that's not saying that XLF is, or I should say financials are weak or should underperform, but I guess it just catches me off guard how they continue to outperform. And look at Bank of America now, $7.50. That's definitely the top end of the range, but there's still that potential for a breakout, still pushing the top end, but look for some type of pullback and an opportunity to get involved at lower prices. Wells Fargo starting to balance. Goldman Sachs really performing rather well, and I still think it makes sense. Morgan Stanley, same thing, continues to work, though I would be looking to secure profits rather than increase my exposure to the long side. And the last name I'm going to cover is Amazon. Just don't take your eye off Amazon. We have a lot of volume down here. 177 matters. We finished the day really strong after getting really plummeted on earnings. It down $25 or $20, close enough. This was a rough ride for Amazon. However, I do like the fact that it reminds me a little bit of Oracle, that all the volume's at the bottom end of the range. Looks like there could be more upside potential in Amazon. If you're looking to play this, perhaps a put spread 170 or 170. All right, let me sell the 175 puts in March and buy the 170s, the 170 puts, or maybe a call spread, the 185 call spread, 185 by 190, and look for some type of price appreciation in Amazon over the coming couple of weeks. Basically, the target would be to fill the gap. Now, realize that there's a lot of people who want their money back just in this time frame, but really, if you zoom out, there is a lot of pain. Now, it's been going down, so a lot of people have been selling, and it's important to realize the bottom of the range, 177, is the high volume area. If you look at it on a 1-year chart, really we're at the value area low, and what really matters is the 195 level, which is the point of control for the year. I'd be really looking to take some type of profits at those levels, put on bearish plays short term, like 1 month out. It would be like sell the 200 calls, buy the 210s, something like that. But anyways, that's really it for tonight. The market looks poised. Keep an eye on names like Alpha Natural Resources, which could present some type of opportunity to the long side. It's been back and forth the last 5 or 6 days. Really volatile swings, and I think that matters. I think it's really building out a base, and I love the fact that we are holding the point of control for the year. That's been, since we've broken out from this little 3-day range, 4-day range, it's been the closing, the price has closed above it, and I think that does matter. Eventually it's going to present an opportunity to the long side, but likewise it could present it to the short side. So anyways, I will talk to you tomorrow.